Hey, what's going on, guys? Welcome back to a brand new video here. I know it's been a while since I had a video. It's been 2 months maybe, but I had to return because this is a very highly anticipated video, probably one of my most anticipated videos ever. And it's gonna be about how to avoid fakeouts. Yes, I know what you guys are thinking. You're probably thinking, Don, you're sick, you're crazy. There's no way you could avoid fakeouts. Which is true. You can't 100% avoid fakeouts. However, you could increase the probability of you avoiding fakeouts. And in this video, I'm showing you guys how. All right, but before we get started into all of that, I wanted to give you guys a little background story of how the whole thing started, how we started to avoid fakeouts in the first place, right? Or how the whole idea came up. So like, there's always been a word around in the industry saying like, yo, you can't avoid fakeouts. They like, you know, you can't avoid when they're gonna happen. You can't just gotta deal with it. And I was like, is that true, or are they just not putting enough effort into figuring out the ifs and whys and hows of how it's actually happening, right? And that's what we did. So back in February 2021, when that was probably one of the last times we actually got caught on fake out without knowing what it was, or without knowing how to avoid them. And it was this post. It was around this time right here. I can't go back on live streams, but I can go back here and show you guys on my thing here. Let me just switch my cam. It was back here. It was February 12th, around this time here, right? And what happened was we drew out the fake out this day. With this day here, I remember the exact day. I remember the exact moment. I remember who's on the live streams and everything. It was crazy, but we drew this out. We're like, okay, you know what? Looking left here, you have a support here. So you have a resistance here, and you have a support here. This is the range that you're in, right? And the moment price closed above the range here, a lot of people, especially with this type of strategy, what they would do is they'll mark up the charts as buys above here and sells below here. So every time I get a chart on the stream nowadays and it says like buys above here, sells below here, I always question them and I always explain to them what this is. Hence why I'm making this video right now, because I want to stop repeating myself. But usually what people do is they'll have buys above here, sells below here, and they'll take the buys above here just because looking left here, they'll say this is clean traffic, which is true. This is clean traffic above here, right? But this is how I get caught. This is how I get caught on fakeouts. The first thing I did wrong here was I went against the trend, right? So the trend was bearish today. The trend was heavily bearish. It was a downtrend, and what I ended up doing was I ended up taking buys as price close above this range here. And this day, the crazy part is that we drew this out and we said how if we were close above the range, I wouldn't take them. I'm only going to take the sells coming back down if we were to close back into the range. And what I ended up doing is I took the buys, obviously, right? Because it's looking left, this clean traffic. We got caught on a fake out. And there's that, right? And that was the day when it really clicked for me. And I was like, wow, okay, well, if I could just stop going against the trend, maybe I could increase the probability of me avoiding fake outs. And that wasn't it. That wasn't the only reason why, you know, this whole thing well, that wasn't the only thing that helped us avoid fake outs, right? It was going against the trend. It wasn't going against the trend. And it was also this whole range 1, range 2 thing that I will explain to you guys in the video. And that range 1, range 2 thing occurred just because I figured that on days when we will never go against the trend, we would usually miss the move going the other way, or miss the chances of us getting opportunities going the other way against the bias. And we figured, you know what? If we could increase the probability of us avoiding fakeouts, we can increase the probability of us taking trades or taking winning trades going against the trend as well, right? And that's how this whole range 1, range 2 fakeout thing occurred. So let me go back on this. Let me draw out for you guys. So the first thing I understand when it comes to range 1, range 2 breakouts is understand ranges. What is a range in general, right? And I'm pretty sure a lot of you guys know what this is. If you guys don't, then you guys might gotta take it back a little bit. Figure out what a range is, because you should be, you know, I'm pretty sure everyone should be knowing what a range is in that, if you're trading FX, right? Or majority of people. But what a range is there's a difference for me, at least there's a difference between a consolidation and a range, all right? But what a range is for me is simple: support and resistance equals a range. So let's just say this is what happens here. Let's say price goes down here. Price goes down, right? And it can go down for however long it wants to go down. However, our job again isn't to really predict where the support is. Our job is to identify the support. And how do you identify the support? Well, we identify support by waiting for a closure a bullish channel closure as support or resistance, vice versa, right? I'm in this situation, I'm doing a bearish example here, but let's say price were to come down now and close bullish support. This would now be my support. This would not be my support, and then from there, I'll probably wait for price to come up to create resistance somewhere. So we don't know where that's gonna be yet. However, we have ideas in our head, levels that may be that resistance. So that in this case, it could be here, it could be here, it could be anywhere, right? But let's just say now price were to come up now and give us that resistance somewhere. Price were to come up, boom, 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 and boom, it finds resistance here. Because what happens is it closes bearish, right? So we don't know we don't know that's a resistance yet until it actually closes bearish here now, right? Because now we're talking about resistance. So now this becomes your support down there, and this becomes your resistance up here, right? So this and this equals what now? This is now a range. This is now a range, chat. All right, guys. Sorry, I keep saying chat. This is now a range now, right? Support and resistance equals a range. Simple as that. It's a lot different from a consolidation. Consolidation for me is when price is just kind of like in here, just ranging, you know, and that's what consolidation is for me. But range is just support resistance for me, because what happens when you break out a range is you're breaking into a new range. Although it might not look like a range, you're breaking into a new range, because let's say now price were to come down like this, and it closes below like 153, or sorry, I'm putting prices. There's no prices here. It closes below the support to the left there, right? What ends up happening now is now that we're closing outside of this area here, we're kind of breaking into a new range, right? Again, support and resistance equals a range. So when you break support, you're into a new range, and hopefully price will come down to create a new support and a new resistance to create a new range. But now that we break out this range, we're into a new range here, and that new range is anywhere below here. And repeat. The same thing will repeat, you know? And that's what a range is. So that's the first thing you got to understand. Once you understand that, it's pretty easy. Range 1, range 2, it's kind of in the wording. Range, you need two. So what it is like how to avoid fakeouts is you usually want to go with the trend, right? However, if you go against the trend, my rule of thumb is you need two ranges to be formed before you can take those positions going the other way. So let me draw out the example here. So let's say price will come down now. Price will come down. Continues to drop down. Or let me make this smaller. Not big. Move it to the right a little bit. Right there. Yeah. Come down. All right, so let's say the initial bias today is bearish, right? Let's say initial bias today is bearish. So in this situation, what I want for buys, or before I actually do that, let me actually just draw the ranges out first. Boom, boom, boom. This becomes your support, resistance. This becomes your support. All right, so let me extend this. All right. So in this situation here, let's say the trend here is bearish, right? So since the trend is bearish, we'll be looking for sells and only sells for a day. However, in some situations, you might not always, you might get buying pressure, right? Or for example, you might get buying momentum, and price tends to continue up forever, or not forever, but it tends to continue up, you know, for a decent period of time. And you may think that you're missing the move. Well, this is when the whole range 1, range 2 thing comes into play. All right. So what we notice within fakeouts that occur is usually the fakeout usually happens whenever you have the first range breakout. So in this case right here, when this happens here, when price goes down on downtrend and then it starts to range here, what usually happens is people start to do this. People start to have the charts marked up as, you know, buys above here, and then they say sells below here on the charts, right? Because they have two biases for a day. They don't already have a bias. They have just whatever ranges comes first, they tend to catch. And that's likely how you get faked out. You get caught in fakeouts, right? So in this situation here, you have these two ranges here. In this situation, if we were close above the range, a lot of people would take buys. I would not take the buys here. The reason why I wouldn't take the buys here is because this is the first range, right? The first range is where you're likely to get caught in fakeouts. And it's happened to us many times on the streams. We were able to avoid it live on the streams, plus cash the fake out plenty of times, and we were able to avoid the loss plenty of times on the live streams. If you guys haven't shown up, show up. Just want to put that in there. But this is where people like to get taken buys, because they would say that, you know, looking left, this is clean traffic, and since we close above this resistance here, price should likely continue up, which is not bad. I'll say the probability of us continuing up in the first range initial breakout is like a 60% chance that we actually continue up, like a 60% chance. However, it's not 60% chance. It's not that high, right? And you want to increase it. And how we increase that was we would avoid these positions here, the first range, and we would wait for a range to break out. Because what's likely to happen in this case is price usually tends to come back into the range in the first range breakout and then to continue down. How many times have you guys seen this? I'm sure if you guys look at the charts, backtest it, you guys have seen it plenty of times where we range, right, create support resistance, price listens it wants to drive up, going up the opposite direction of the trend, and what ends up happening is price tends to close back into the range and then continue down. All right, it happens a lot, right? So that's why we just, whenever this sales occurs, we just simply stay out. I don't buy on it at all. I don't hesitate on it. It's just nothing for me. It's no positions for me. It's not part of my playbook, not part of my plan or anything like that. So I'll probably stay out of this situation here. And then I'm waiting for range 2 again is this. So how do you identify range 1? This is the first range here, because when prices are coming down on a downtrend, it created a support, right? So once that support is created, that's the first initial range. Or sorry, once that first support and resistance is created, that is the first initial range that's being formed here. This is now a range 1. So you can now mark this up as a range 1 here. Right? Range 1, let me highlight it so you guys won't be confused. Range 1. And then range 2 could be anywhere. Again, once you break out of the range, going back to what I explained earlier, once you break out of the range here, you're breaking into a new range here. So this comes now range 2. So whenever price creates that resistance, let's say it creates a resistance here, comes down towards the support, this is now a range, right? Now you have support, and now you have a resistance. So what ends up happening here is this is now a new range here. Where's my orange highlighter? There it is. This is now our new range here. So this is range 1 from earlier. Range 1, and this is range 2 now, because this is first range, second range, right? So when going against the trend, this is likely where I'm probably going to take positions now. When price comes up now. So let's say now price drives up and breaks out this resistance here, like this. Right, because now it makes more sense, right? You have a range 1, range 2. You have a new range here. Once you break out that second range here, this is where I'll take my positions going up, going against the trend. And this is the only way I'll take positions going against the trend if you have a range 2 breakout or anything above range 2, obviously, right? But usually once you break above range 2, you can kind of forget about the whole range 1, range 2 concept, and you just take buys whenever, range 3, range 4, range 5, whatever, right? But this is an example of what a range 1, range 2 is, and this is what increases the probability of you avoiding fakeouts as you stay out of that first initial range breakout, because that's likely where fakeouts were to happen. All right. So again, the first initial step is, first of all, to find bias for a day. All right, find a bias for a day. I probably will make another video on how to find a bias. However, if you do tune to the live streams every day, you will know how I find a bias and how I figure out the bias for a day before or at the beginning of every stream. Basically the first 10 minutes of it. But find a bias, and then 2, what you're gonna do after is mark up ranges. 3, identify ranges. 1 and 2. And from there, this is, again, waiting for your playbook, right? Whatever your playbook is, your setup plays that you wait for, right? Your plan, wait for your setups, and maybe you could, maybe you could include this into your strategy, right? And include the whole range 1, range 2 breakdown into your strategy. But here, I'll show you guys an example of it right here. This is the best thing I found right now, at least. I didn't really do that much digging back, but so here, for example, right here. So let's see how like the day. So let's say the day bias is bearish. I'm pretty sure day bias is bearish here. Day bias is bearish here. We came down, right? And the first thing price did was it created a support here. Let me actually go back to this. This is less confusing, right? So price created a support here. It created support. That's the first thing price did. What else did price do after? It created resistance. So once price created support, it came up to create a resistance here, right? And what happened at resistance? Or sorry, it created resistance. It tapped this resistance here. There was a resistance right here. Looking left there, where price rejected mint has in the past before. The resistance looking left there. So actually, you know what? I'm just gonna draw a line going all the way across here since it matches up. Like so. All right. So once it created support, it came up to create resistance. This is a range that was kind of created here. But how happened here? The next candle came up, this bullish candle, and it closed above the range here. And you see how since the start of the reversal, like support being created, resistance, this is the first range here. You see how price closed above the range on the first range breakout? What ended up happening was price came back into the range, right? And chat, this isn't always going to happen where there will always be a fake out on the first range breakout. So don't try cheating your way out of it. Don't try taking positions before we actually close back into the range. This is just what happens majority of the times. I would say around 75% of the time. This is how fake outs usually occur. From what I know, it's on the live streams, from what I know is everyday trading, right? But price goes above the range here. So in this case, people would expect price to continue up, and this is where people take buys because they're like, oh yeah, look left. There's clean traffic to the left here, and price should continue up. Let me just redraw that. All right, cool. So this is where people like get caught in fake outs. As price kinda close above the range and people will take buys now looking left, there is clean traffic. They see this whole initial push and they're like, oh yeah, price got reversed, price has to reverse. We must retrace the whole entire move that just dropped, which isn't always true. Remember, don't try to be a hero. Focus coming in second place. Any given point, price can just drive down forever if it wants to, right? You don't control the markets. Markets will move however it wants to move. Your job is simply just to follow the trend, follow where price is going. Again, that's part of coming in second. You don't want to be a hero. You don't want to call the tops. You don't want to call the bottoms. You don't want to call the reversals, because what's likely a chance of you actually being right on the reversals over a period of time, right? Because I've seen so many times where prices literally trended for like days and weeks even, and people are still trying to catch reversals. And by the time price is on its fifth, institutional level or fifth or block or fifth, resistance, price is still going against the trend, and they have like 5 positions, 10 positions by then, right? So it's not worth it. It's more so just wait simply for price to reverse, see price reverse, see it on a chart, see it happen already, and then jump on, and ride a wave down or ride a wave up wherever price is going, right? But I hope this video has helped you guys. Oh yeah, sorry, I'm not done. Yeah, so price goes above the range, came back into the range, and obviously when it came back into the range, it filled the range and it continued down. Following the day trend, right? So then that was a fake out. I'm pretty sure you guys know what fake outs is. But yeah, this ended up being a fake out, and then price continued down for the rest of the day, rest of the session. I think there's another example here as well. Let me fast forward a little bit. I'm pretty sure there was a new resistance being created here or something here. Yeah, right here. Again, perfect. Another example. All right, another example. So let's say the day after, this is a new day. Let's say we were bearish, the trend was bearish, right? What ended up happening was there's a resistance formed and there's support formed. So price ended up coming down, create a new support down here, ended up creating a resistance right around here. This now becomes the first initial range here in this situation, right? Because this is a new support. And when price were to come close above the range, people will take buys here. People will be like, oh yeah, looking left, there's clean traffic driving price up towards next resistance, wherever, next resistance, and I can take buys going up. What ended up happening here is the same thing. Price came back into the range, closed back inside the range, and this ended up being a fake out. And if you were with us, then you would be in positions here and not buys here. You'd be in sells here, or even sells once you break below the support down here. right? This is a fake out. But yeah, that's what a fake out is. I hope I gave you guys good enough examples. And the great thing is about this is that we've been doing it live every morning at 6:30 a.m. Eastern, live on our live streams, providing live examples, live results, and yeah, tune in into the live streams. All right. All right, now guys, hope you guys take it easy, safe trading, peace and love, and I'll catch you guys in the next video. Peace out.